Welcome back. This is Corporate Radar. The stock of the morning is clearly auto parts maker Samvardhana Motherson, which has surged 8.5% after the company announced it will acquire an 81% stake in Japanese company Yachiyo's four-wheeler business. Yachiyo, remember, is a subsidiary of Honda Motors. To discuss more on this development, we're joined by the company's director, Laksh, Vaaman, Sehgal, and the CFO, Kunal, Malani, on the show. Gentlemen, thank you very much for joining in and congratulations. Mr. Sehgal, this is a big partnership with Honda where you will be holding 81% stake in Yachiyo's four-wheeler business and Honda will continue to hold on about a 19% stake. Just want to first understand, how much are you going to be paying in? Is there any debt on Yachiyo's books? Because purely when we look at the equity value of the acquired company at $145 million and the revenues of 800+ million euros, it appears to be that the EV to sales is quite less than 0.2x. So are there any hidden costs? Is there debt on Yachiyo's books?
Look, there will be a net cash position when we take this company over. I'll let Kunal explain the deal transaction to you. But I think at the outset, what's important to understand is that Motherson has been handpicked by Honda-san for this asset. This is a very strategic asset for Honda-san. It has a rich history of development of products. It has leadership in its products such as sunroofs and the fuel tanks that it does. But not only that, in the past, it's also done plastic tailgates. It's assembled full vehicles for Honda-san. So really a company that is very rich in engineering, a company that has a lot of capability and has really also copied the footprint of Honda-san globally, which allows us, Motherson, to bring in a lot more products to Honda-san for their future offerings and also take their existing products such as the sunroofs and the plastic fuel tanks and their capability in the other products to our existing customer base for growth for Yachiyo. Very, very strong R&D company, 3 locations, R&D locations, and a very rich history of bringing products to market with very, very high quality, obviously, expectations from the customer and been very successful at that.
From a transaction structure perspective, we would be buying 81% of Yachiyo's four-wheeler business. This will be for 145 million euro equivalent or 23 billion JPY for 100%. So the 81% would be around about 19 billion JPY or around 117 million euros. From a transaction structure perspective, first, after this announcement that we have done, we will be applying for antitrust approvals. Post that, Honda-san will be making a tender offer. They are already holding 50.4%. They will require to at least get 66.67 or 2/3 of the asset, and then they can take this asset private as per the Japanese regulations. Assuming they are able to take this private, they will then buy the two-wheeler business out of Yachiyo. And then what is remaining is the four-wheeler business, which we will then acquire 81% for, as I said, the 118 million euros from Honda-san. And Honda-san will retain the 19%. Now, as of today, Yachiyo is a net cash balance sheet business, with this being expected to go to Q1 FY25 from a closure perspective. Between now and then, we anticipate the net cash position to remain, maybe even accrete from where it is today. And hence, the enterprise value is likely to be lower than the equity value.
Okay. Just Kunal, to you, what will this acquisition take your overall debt levels to, and what would the net debt to EBITDA levels look like?
Sure. So we will be taking debt to acquire this asset. As you would appreciate, the terms are such that the leverage here is not going to be a concern. Even after considering all the announced acquisitions that we have done till date and which will get consummated over the next, let's say, 6 to 12 months, we still anticipate the aggregate net debt to EBITDA to be less than 2 times by the time this transaction is done as well. So much below our threshold of 2.5 times that our financial policy of 2.5 times.
Kunal, you're saying the net debt to EBITDA would go up to 2x. That's substantially higher because I think you ended FY23 with a net debt to EBITDA 1.4x. I understand it's still below the company's threshold of 2.5x, but it's still a pretty, big jump in net debt to EBITDA. Would you be looking to bring it down? And once again, what would the absolute debt number stand at?
Maybe I'm being a little conservative when I'm saying 2x. Hopefully, we'll be much below 2x, maybe closer to where we are. There is the SaaS acquisition that we had announced a few months back that is expected to close sometime in the next few months, where the exact consideration will be known at that particular point in time. But from where we are, our organic business should anyway be deleveraging. And in spite of some of the organic growth that we have already announced, we do anticipate this to be, less than 2x, possibly maybe closer to where we are only. But yeah, as time comes, we will talk about it because the exact timing of some of these acquisition closure is still in the works. So difficult to have a foresight around it. But as I said, existing business deleveraging, new organic growth, adding aggregate level, certainly below 2x, maybe closer to where we are.
All right, Mr. Sehgal, this will mark SAMIL's entry into a new segment, that's sunroofs as well as fuel tanks, which have a revenue contribution of around 3% each. Now, considering the opportunity to cross-sell, how much can this scale up to in terms of contribution?
Yes, absolutely. I think, our chairman, my father, had set the vision for the company to be, 3CX10, no customer, no country, no component to be more than 10% of our business. Yachiyo fits in there beautifully. It adds the sunroof component, which we're not really there in a meaningful way, and the plastic fuel tank capability that they have, and other fuel tank capabilities for such as hybrids, and of course, hydrogen tanks when they come, they have full capability and engineering expertise to really be able to continue to develop that. Honda-san, as you know, has very high quality requirements. They produce some of the best cars in the world. So if these products are able to satisfy their requirements, we are quite confident that taking these products to our other customers as well, we will get traction. Of course, we're only talking about the four-wheelers here. These products are also to be used in off-road vehicles, commercial vehicles. So really a lot of possibilities really open up for Motherson. And also, only 90% of the share of this goes to Honda-san. 10% is already what the company Yachiyo has been able to break into with the other customers, which again opens the doors more for Motherson products to come in. So really a two-way street. Of course, Honda-san will get access to all of Motherson's technologies and portfolio, and bring Honda-san in a meaningful way to our customer split. And Yachiyo will, of course, add to our product offerings that we can to our existing customers.
Mr. Sehgal, right now you're going to be holding a 81% stake in Yachiyo, while Honda will hold the balance 19%. Is there any kind of, conversation between the two? Any plan to take on Honda's stake of 19%? Do you have a right of first refusal? Have they indicated how long they plan to continue holding on to a minority stake?
Look, we are honored to have this partnership with Honda-san. Of course, they have indicated to us that they are planning to hold on to this 19%, but in the longer term, these are some things to be decided together with them. But I think the very important thing is that they continue to hold that stake, that 19%, even once this transaction is done, because they believe in Motherson's vision. They believe that Motherson can bring a lot of product technologies to their offerings globally, and they believe in Motherson as a partner. So, of course, things down the road, we will continue to assess, discuss with Honda-san, but this partnership will continue regardless of the shareholding. And we believe it's something that we are quite excited about and will open a lot of gates for Motherson.
All right, Kunal, your vision for 2025 was already laid out. Revenues of close to around $36 billion with 40% ROC and 40% dividend payout. Now, with this acquisition, what will the aggregate revenue look like? Because I think you've done a few more acquisitions as well. So how do things shape up now?
More acquisitions, yes. We've always had a pipeline, as we have mentioned again and again. I think the times are turning favorable for players like us, which have a stronger balance sheet as the rest of the world goes through both operational as well as financial stress. So we are getting more and more traction from our OEMs to be able to offer more and more assets to us, and we look forward to doing more. For sure. From a revenue perspective, if you consider our Route 36 construct, we are at 12.7 today. SAS on a gross revenue will add 5 odd billion. Among the other transactions together with this is another billion. And then the organic growth on top. So maybe we'll be hitting somewhere between 19 to 20 odd billion already if you were to assimilate these transactions today. And then there's more to it. So yes, we're on our way to 36 for sure.
Okay, so on track to achieve $36 billion of revenue by 2025. But you gave us a number of $19 to $20 billion in terms of revenues. Is this the number today, or is this the number which you will achieve by the end of FY24?
By the FY25, we will be closer to the 19 to 20 billion mark. That's the time frame by which these assets will be assimilated pretty much completely. But as I said, between now and March 25, hopefully there are more inorganic and organic growths that we can announce.
Okay, and there'll be more acquisitions, but you will make sure that your net debt to EBITDA stays below 2.5x.
Always. That has been our financial policy, and we will stick to that.
All right, Mr. Sehgal, why have you kept the two-wheeler business outside of the partnership? If you could tell us, give us some kind of rationale for that.
Look, this two-wheeler business of Goshi was never a scope of the transaction. It was always kept aside by Honda-san. We were focused on the four-wheeler business, which was what was the request from Honda-san for us to look at. I think this question is perhaps better asked to them, why they felt that they would like to retain that. But regardless of that, I think, again, our strengths are in their product portfolio that they're offering to the four-wheelers. This is where we can add considerable synergies to it. We can add on more customers and also take these technologies to our existing customers. So, even without the two-wheeler business, this complete thing is extremely exciting for us, opens up a lot of doors, and we're quite excited to close the transaction and deliver a strong growth and ROCE from this business.
Mr. Sehgal, Mr. Malani, thank you very much for joining in. Need to slip into a very short break on that note with the news that markets are still very, very quiet. So the first 1 hour of trade has been practically done, and the Nifty hasn't moved too much, just shy of the 19,400 mark. Mid-caps, though, are holding up quite well with a gain of nearly 0.3%. On the other side, our stocks which are on the move.